Hello everyone, this is Calvin, Professor C here. Welcome to part 2 of the tax and real estate series, where I talk about many different taxes related to a real estate transaction and owning a home. Now, last time we talked about land transfer tax, first time home buyers tax credit, and property tax. So if you want to know more about those three taxes, go back to the first part of the series and watch that video. So first we are going to talk about land transfer tax. Land transfer tax is a one-time tax that you payable when you purchase the property. So it is very complicated to calculate, but it's all online. So I will have a calculator, a link to the land transfer tax calculator below in my description. So if you want to know how much you need to pay on land transfer tax when you purchase a property, you can just click that link, go in and put in the purchase price of your property and the city where you purchase it in. Then you will know the land transfer tax that you need to pay. Now, one thing you have to know is in Toronto, you basically have to pay double the land transfer tax, double than the tax anywhere in Ontario. So basically it is much more expensive. Okay, so if you purchase a property in Markham, let's say for $1 million, you need to pay about $13,000. But if that same property is in Toronto, you need to pay $26,000 roughly. So it is much more expensive to live in Toronto. Okay. Now, land transfer tax, there is also some incentive for first-time home buyers. So you are most likely eligible up to $4,000, but there are some strange or special situation that you might or may not get the full $4,000. For example, if you purchase the property, say with your parents, and you guys both own 50-50, then maybe you can only claim about $2,000, unless you apply to the government and try to claim back how much, like the parents' portion, which is a little bit tedious procedure to do, but you can try to do that. If you purchase it with a spouse, but she has owned a property before getting married, then you might be able to get back the full portion, and there are some special rules apply to you. You just have to go to the website and see if that applies to you. Okay, it's a little bit complex to explain in the video, but I will have the link below, and you can check whether you can get the full $4,000 first time home buyers land transfer tax rebate. Also, by first time home buyers for this land transfer tax, it is really only first time home buyers. Now, this is a little bit confusing because first time home buyers, in terms of some other government rebate program, it is not really first-time home buyers. For example, if you have purchased a home 10 years ago and then sold it 10 years ago and then have not owned a home in the last 4 years, 5 years, or 10 years, then some of the program you are considered as a first-time home buyers again, right? Even though this is really not your first-time home, first time buying a home. But for the land transfer tax one, you really have to be a first-time home buyers. Okay, so that's that. And let's go on to the next tax, HST. So when buying a resale property, there is no HST involved. It is HST exempt. Okay, so remember that. So HST is more related to new build or hugely renovated property. So it's just new basically, right? So HST, there is a new home rebate. Most of the time, the builder will claim that rebates for you. So they will basically sell you the price as is, and they go ahead and take the rebates from the government. So if they sell you, say, $1 million as an advertised price, then the price is included HST. Now, one thing that you have to understand is that one is, if you're buying the property for intended for using it as a principal residence, okay, principal residence only. So if you are buying it as an investment, then no. If you're buying a $1 million investment property, yes, you have to pay the HST upfront. But you can claim something called a new rental residential property rebate. So, you can claim back a rebate. And basically, you have to lease out that property already, and you don't move in before your tenant, like you have never used it as a principal residence property before. There's a couple of things that you have to follow, and if you follow that and you have all the proper paperwork, then you can claim back up to $24,000 HST rebate. And if the property is cheap enough, it's like 400,000 or less, then it's not exactly 400,000, is for something. Don't quote me on that, but it's if it is qualified, you may get another $6,000 roughly back. So you may get back 30,000. That's maximum about, right? And when I say about, roughly, approximately, and all that, because tax in Canada is a funny thing. It changes every year. The amount change all the time, and I don't know when are you watching this YouTube video. You might be watching it 2020, 2021, and all that. So don't quote me on that. Just understand that there is properly something that is rebatable. All of this tax related, talk to your accountant, right? So this video is taped in June of 2019. So as of today, there is some rebates that you can get, most likely $24,000 up to, and if it is over 400, less than 400 something thousand dollars, you can get back approximately $30,000. So that's that. Some other things you have to understand on the HST rebate is, if you are buying a house, say that you intend to live in it, right? But say for mortgage qualification purposes, you have to add your uncle on title to qualify, because he has a high income. Then unfortunately, most likely you will not get the rebate, because every single one of them, even though they own 1% or they own 50%, doesn't matter. Anyone on title must be intended to live in that property in order for every single one to get that rebate. So if one person is just there for mortgage purposes and does not intend to live in it, then unfortunately, you don't get the rebates too. Okay, so don't make that mistake. It's very, very costly mistake. Okay, so the next tax that I want to talk about is the non-resident speculation tax. I actually made a whole separate video on that and how some of the people may get back the non-resident speculation tax. And if you want to know more, just go to that video. But this is a tax that is introduced in 2017 April, and is for those people buying a property but is not a Canadian or is not a permanent resident of Canada. They will have to pay an extra 15% tax, 15% tax, if you're purchasing in the greater Horseshoes, they call is bigger than Greater Toronto area, is Greater Horseshoes area, right? And if you want to know which city which area is included in the Greater Horseshoe area, just Google it. Okay, so basically it's the GTA, the Greater Toronto area, plus some of the neighborhood city like Newmarket or Hamilton or something like that. Okay, so you have to pay 15% extra tax. There is, again, on my other video, we talk about some other exemption and as well as how you get back the rebate, but not everyone would get it back. So you just have to watch that video, and the best is talk to your accountant or your lawyer. Okay, but that's for non-resident. So if you're a Canadian, if you're a permanent resident, then you do not have to worry about it. Okay. Lastly, I want to talk about another tax. This one is capital gain tax. This one is when you sell your house. It's a one-time tax that included in your tax in your tax filing. Okay, so first of all, if the property that you sell is your principal residence, then it is tax exempt, so you do not pay tax on that gain. So say that you buy your house at $500,000 10 years ago, and now it's $800,000. And when you sell it, because you live in it all the time, this is your principal residence. Even though you made $300,000, you do not pay a penny on it. So that's capital gain. But if the property is used for investment purposes, then yes, that $300,000 gain, you have to, count it as your income in your tax filing, and according to your tax bracket, and whether there's capital loss and all that stuff, then yeah, you probably have to pay tax on it. Okay, so that's capital gain tax. It is a tax that is you have to file your tax on the gain that you made on the property. And another kind of related tax is business income. So it's not an extra tax, it's just how you treat the taxable the gain. So I know I'm starting to confuse you. Let me start it over. Business income is kind of related to the capital tax gain. So remember, I just tell you that, if you buy your property at $500,000 and you sell it at $800,000, you make a gain of $300,000. Now, in Canada, capital gain tax is kind of treated more favorable, so it's less tax than a typical income or business income. Okay, so that $300,000 you may pay less tax if it is treated as a capital gain. But sometimes some people, the Revenue Canada would treat that capital gain as a business income. Let me give you an example. So if I have 6 different houses on my hand, under my ownership, and I buy a property and sell a property every single year in the last 10 years. Okay, so Revenue Canada may say that, hey, Calvin, instead of buying and holding the property as an investment, it seems like you are doing a business of buying and selling property instead of holding on to the house and treating it as an investment. So they deem me, or they think of me as running a business of trading property. Okay, so there's no hard definition of it. It is all up to Revenue Canada and how they interpret, what I'm doing. But if I'm buying and selling a property every single year or more than once a year, they very well think of you as running a business of trading property instead of buying and holding an investment property. Okay, so in that case, they may ask you to pay some tax back because you may file your tax as a capital gain, and they may say no, this is not capital gain. You seems like you are running a business, so it is a business income. Okay, so that's something that you have to keep in mind. Again, I am getting into some of the complex tax treatment of property. Talk to your accountant. The video is just for you to understand that there is something out there like this, and just to make you aware of it. But I totally think that you should talk to your accountant if you find yourself into this situation. Okay, so I hope you like this video series. In the future, I will probably do more like this. And again, if you like what you watch, subscribe to the channel, and I will do a weekly video update. And so when you subscribe to it, then you will get a notification when I upload a new video, and it's free to subscribe. Okay, so if you have any question, any other comments, just put it in the comment on the YouTube section. Okay, thank you.